Hey guys, welcome back to the channel. I'm Marcus Williams, CPA. I know it's been a while since I've talked to you guys, and a lot of the reason behind that is because it was just busy season for tax preparers. But good news, the busy season is over, the deadline is passed, and I'm back to making videos for taxpayers and business owners just like you. One thing that I've decided to do is to go over frequently asked questions I got during busy season. And the top question that I'll say that I got from taxpayers and business owners is how to structure their business, which led into different conversations on things like what is the difference between an LLC, partnership, and an S-Corp. So if you're looking to start a business, or if you're a business owner that already has a business and want to know the different options that they can do once their business grows, or once they add new owners in their business, stay tuned to this video and hopefully some of these tips will help you going forward. So guys, when I'm going over these tips, I am going to take some notes on my new Galaxy tablet. Also a business deduction for those business owners out there wondering of different things they can deduct for their business. So the first business structure that I want to go over with you guys is an LLC. An LLC is the easiest business structure to form, and it's also the easiest business structure to manage. So when starting an LLC, you want to do a couple of things to start off. The first thing you want to do is come up with a unique business name. And the reason I say you should come up with a unique business name is because a business name is what first attracts, maybe one of the first things that attracts a customer. If you have a unique, standoffish, not commonly seen business name, that may draw clients to your business. And once you get that business name, you want to register your business with the Secretary of State of the state that you reside in. So the reason being is so that the state that you reside in will know of your business, and that way they can link it to you as a person if you're a single member LLC or if you have multiple members. And then the third thing you want to do is go to the IRS website and get a federal identification number. The reason you want a federal identification number is when you prepare your tax return, the IRS can link the tax return to your business, which is then linked to you, and they know you are the person reporting the income, and they won't have any questions. So once you do those three things, you have an LLC. Now you may be asking yourself, or even asking me, to Marcus, so it's just me, why do I need to do all this? Why can't I just, generate the revenue, put my expenses on there, and just put it under my social security number? Well, the reason you don't want to do that is because business structures like an LLC, partnership, and S-Corp offer something called liability protection, hence the full name of an LLC, limited liability company. So let's say, for example, a creditor or debitor tries to sue you, or you're even sued by a customer, and the customer could be rightfully suing you, and in this example, a customer is suing you for $100,000. But your business assets, you only have around $50,000 in business assets. That customer can only, if they sue you and if they win, only get $50,000 from your business, because that's how much your business is worth. So if you have cash in your business, cars, real estate, or different things like that in your business name, that's the only thing they can get. They could not, for example, get anything from you personally. Like they can't get your primary resident for your house, personal cars, personal equipment, or different things like that. So that is a reason why you want to start a business structure like an LLC, S-Corp, or partnership to have that protection. Another thing about an LLC, that it is the most easiest business structure to operate. So when you start an LLC, if it's just you as an individual can run your business as you see fit. You can have a really lax operating agreement. You could, choose if you want to have a cash-based business or pool-based business or different things like that. So the operations on the LLC, especially if a single member LLC, is really lax, and you kind of can do whatever you want. So another thing that you guys need to know is that owners of an LLC are called members. So when you're a member of an LLC, That just means that you own part of the company. And ironically enough, for an LLC, you can have as many members as you want. So you, your family, friends, you all can be owners, partial owners of an LLC. And then another thing that I want to talk to you guys about is the tax form that you have to file when you have an LLC. That tax form is called a Schedule C. And a Schedule C is basically an attachment to your 1040, and LLC is basically seen as a disregarded entity. So when you file your 1040, you will also file Form Schedule C, and it will attach to your 1040, and they all get filed together. So there's no separate filing for a LLC for a single member. It all goes on your 1040. And basically how it works is you will get taxed if you had income in your business on Schedule C. You'll get taxed at your personal tax rate as if you had a W-2 job for state and federal taxes. But one thing that you guys need to know about an LLC, that there's another tax besides state and federal tax, and that tax is self-employment tax. Self-employment tax is 15.3% of the income that you make, and 12.9% of that is Social Security, and then 2.4% is Medicare. The IRS sees that if you are self-employed, you have to pay, like say for example, at your job, they withhold Social Security and Medicare for you, but then they also match whatever Social Security and Medicare that you made on your wages. So since you're self-employed and there is no employer, you are the employer, you need to pay both portions of that tax. And ironically enough, when you pay that part of that tax, you actually only have to pay half, because since you're an employer, you get the deduction of half of being able to deduct half of that as the employer, but you still have to pay that portion of it as the employee. So remember that when you're an LLC that you have 3 different taxes to pay. You have to pay federal, state, and self-employment tax. And just another thing that I want to go over with the LLC is that since the LLC is the simplest structure to have, it goes into the next structure, and that next structure is an S-Corp. So if you guys are big Pokemon fans out there, you can see S-Corp as being the evolved form of an LLC. So, and the reason that you may want to change your business structure from an LLC to an S-Corp is simply by the fact that your LLC is doing really well, and there are some tax benefits to reduce your tax liability from switching from an LLC to an S-Corp. So to do that though, you must fill out Form 2553. You will send this form to the IRS, and it basically tells them that, hey, I don't want to be treated just as an LLC anymore. I want to be treated as an S-Corp. Okay, so why would I want to be treated as an S-Corp? The main reason I tell my LLC tax clients to switch into an S-Corp is because you have the potential to pay less in self-employment tax. So, like we talked about self-employment tax, 15.3%, and that's on all revenue generated from your LLC. But let's say, for example, you don't want to pay all that. You want to be like a W-2 employee. So the IRS gives you the option to actually run payroll in an S-Corp as long as you pay yourself a reasonable salary. So a reasonable salary, what I mean by that is, say for example, after all expenses, your business made $100,000, right? In the LLC, all of that, you can be taxed at 15.3%. However, if you pay yourself a reasonable salary, and let's say that reasonable salary is half, you can only $50,000 of that will be you will have to pay self-employment tax, and the other $50,000 you will pay payroll taxes on. Now, for this video, that will be a long breakdown to go over, and I will do potentially, if you guys want, leave a like in the comment section below. I will make a video with the same numbers from our LLC and the S-Corp and show you guys the difference between the self-employment tax they would have to pay if they run payroll or if you don't run the payroll with the LLC, and there's usually a gap difference that you can save. But just some key things to know when you are saving on that self-employment tax, but for an S-Corp, you will have to pay. You have to run payroll and pay payroll taxes, and you will also potentially have to pay some type of payroll service to do the payroll for you. But you can determine if you want to get paid weekly, bi-weekly, monthly, every 6 months, however you want to do that payment structure, so the burden is less for you. But when you do this, you do want to make sure that you have a separate bank account, because it's going to work just like any other W-2. They're going to withdraw the money from that bank account, and those wages will be sent to your bank account. And at the end of the year, you'll get a W-2 from whatever your business name, and as you as an employee that you'll file on your 1040. So another thing that you guys need to realize about an S-Corp is that it's a little bit stricter to running an S-Corp than it is an LLC. You actually need to have a bylaws agreement with a S-Corp, basically saying things like, what percentage does everybody have of the S-Corp? Who will be taking the board meetings? How often will you guys be meeting to vote on different things? Who has voting rights in the company, and what percentages that it is? It could be, some person who put up more money in the company, maybe their vote count, his vote counts for 3 and everybody else votes counts as 1. So you need to have bylaws and different things like that in your S-Corp. Also, like I told you guys, that in a LLC, you can have as many members as you want. In S-Corp, you only can have up to 100 members, and they are called shareholders. So remember that you only can have 100 shareholders in the S-Corp. Now, as far as tax forms go, like I told you guys, you will get that liability protection with an S-Corp just like an LLC. But the tax form that you file is different. For an S-Corp, you will file 1120S tax form, which is separate from on your 1040. And on this tax form, basically, you'll put all your revenue, all your expenses, and different things like that. And it actually will generate something called a K1. And the K1 will flow through to your 1040. So basically, all the portion of income or loss that is yours will go to the K. We own the K1, and you'll enter into your 1040. So if you had losses in the business, or if you had revenue, that'll go on your 1040. If you guys had capital gains, short term or long term, it will be on the K1, then it'll go on your 1040. Or if you had Section 179 depreciation, your portion of that will go from the 1120S to the K1, which will then flow through to your 1040. And another thing that you guys will want to take note of, that usually a tax preparer will charge more to file 1120S than the attachment of Schedule C on your 1040. So that's another thing to be mindful of. I know we talked about saving on self-employment tax, but you may save on self-employment tax here, but the higher rate of cost to prepare the tax return, or even the higher the amount to take payroll, may close that savings gap that you had. So it's also good to have a tax preparer run those numbers for you to let you see how much money you are actually saving. And then the final business structure I want to go over is a partnership. So a partnership is the default classification of a multi-member LLC. If you have multiple members in an LLC, you will have to file as a partnership, and that's the default. You don't have to do like the 1120S as a S-Corp and file like a different form like the 2553. It's the default. You don't have to do anything else. So just like the two structures above, like I said, you will have the liability protection if anyone tried to sue you, whether that be clients, debitors, or creditors. But also you will need to know that just like an S-Corp, the operation agreement is a little bit more detailed and stringent than on an LLC. So for example, if you're a single member LLC, like I said, you can basically run business as you see fit. It's just you. You'll make all the decisions that will affect the business. But as a partnership, it could be you and one more person or however many more people, and you guys may have to determine different things and have different things take place. So, for example, in a partnership, on your operation agreements, just like the S-Corp, you may want to determine, who has voting rights, what percentage will the profits be split. If they want to add a new member, does it have to be a unanimous decision, or can it be 2/3, or different things like that? So that's one thing that you want to put in your operation agreement. Another thing with partnership, so as you can see that, as I said, that S-Corp, you can pay yourself a reasonable salary and run payroll. You cannot do that with the partnership, but you do get something called guaranteed payments. So guaranteed payments are basically that, if you and your partners, you determine that, hey, no matter how the business does, if we have a gain or if we have a loss, we will get paid something. And you guys in that operating agreement need to determine what that something is. And you can change it by a yearly basis based off how your business grows. So say, for example, your business just started, you say, hey, no matter how we do, we're going to pay each other $1,000. And you can pay yourself this $1,000 whether you guys have a gain or a loss. And it is deductible from your business revenue as a business expense. Now, just to be mindful, you will have to pay self-employment tax on that guaranteed payment. However, it does deductible against revenue to lower your revenue in the business. And also, just like an 1120S, you will file a separate tax form from your 1040, and this is called a 1065. And on this 1065, it would also give you a K1, just like on the S-Corp. And just like on the S-Corp, it's gonna break down, your portion of the business income, business revenue, the business loss, Section 179 depreciation. It will have how much you got in guaranteed payments on there, so you will get taxed that 15.3%. And it also will just basically flow through to your 1040, just like 1120S from the information on the K1. And since you don't want payroll in a partnership, it will be a little less costly than the S-Corp, but you don't get the benefit of running payroll. But you won't have to get payroll ran either. So that's just one thing to think about with a partnership. But like I said, the default for a multi-member LLC is a partnership. But if you wanted, you guys could change it to an S-Corp. But that's where a CPA or a tax preparer comes along to do that tax planning, to run different numbers to let you guys know, hey, this is what you could potentially save if you restructured your business like this, or what you could potentially save if you just kept it the same. Because when you get into S-Corps and partnerships, the price to prepare the returns, like I said previously, costs more, but it may save you money in the long run. You may change your business structure and end up saving like $4,000 in taxes, but then you may want to have to also account for S-Corps running the payroll, also the higher cost of just the preparation of the tax form in general. For example, to file someone's Schedule C, depending on what else they have going on, it may cost a taxpayer $300 to $400, maybe $500. But then once you get into the partnerships and the S-Corp, the start off price might be $600, $700, and depending on all the activity and how your books are ran, it might even go from $600, $700 to $1,000 to $1,500. And then your tax saving could go from, okay, I saved $4,000 from being, an S-Corp from an LLC. And then after you add all those other things like the bookkeeping, the running the payroll, the higher amount for the tax form, maybe you only save $1,000. And to you, is that hassle, worth doing all this extra work or hiring someone else to do it? That's a decision that you'll have to make. But that pretty much wraps up everything I had for the partnerships, S-Corps, and LLCs. Like I said, for you guys, I will be dropping a video to break down the tax liability of an S-Corp and an LLC when you run payroll and when you don't, and let you guys see the potential tax liability that you could be saving on. But so that's everything I have for you today, guys. Like I said, I'm Tamarcus Williams, CPA. I'm glad to be making videos for you guys again. Stay tuned, and I will always make sure that I drop something new for you guys weekly. Thank you.